Hey guys, thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin and just giving a brief update on the price. I wasn't actually planning on making a video tonight, but considering the recent price action, I thought people would appreciate one. So if you do like this content, please subscribe to the channel, turn your notifications on, and also check out the Telegram channel in the description below. We just crossed 1,900 members. Recently, we've been talking about the 20-week moving average and noting that historically we really need to hold that 20-week moving average as support during a bull run for us to really say that we're in a bull run. And I mean, clearly we could, there's always the argument that it might not be as cut and dry as it was the last market cycle, but at least this was what happened last time. We saw the price basically hold the 100-week moving average and then transition to holding the 20-week moving average for 2 years. Now, the first time we broke above the 20-week, we did not hold it as support, and the second time we did. Clearly we don't actually, once we broke through the 20-week back in 2019, that was what spurred the run from $4,000 to $14,000. And you can see we kind of homed in on this 20-week moving average, and then once we broke it, during the subsequent week, we dropped down to the 100-week moving average. And then we popped back up to the 20-week, came back down to the 100-week, came back up to the 20-week, and then we saw this little, mini move where people got really excited over this small move here. And remember, look how small that move is. If you look at the bigger picture, it's almost unnoticeable compared to the larger picture. So, one of the things I've talked about before is that it might take a longer time to hold the 20-week moving average as support. There is the possibility we might have to print a third golden cross during an accumulation phase. The last cycle it took 2 golden crosses, and in the first cycle it took 1. And that's a possibility because of the idea of lengthening cycles, which is what I talk about a lot on this channel. I don't think that Bitcoin is going to I don't think it's going to be peaking in 2021. I think it's just people thinking that it has to be a 4-year cycle. I don't think that's the case. I think it's more likely to be 2022 or 2023. And if that is the case, then continuing to just stay in this region for a while is definitely on the cards. People have been asking me for months if I thought we would reach 20,000 in 2020, and I said I don't think so. Clearly there's a probability that we would, but I really don't think it's on the cards, and it kind of confuses me to some degree why so many people do, because even if you prescribe to say the 4-year cycle theory, if you go back 4 years, it wasn't even until and I guess the halving isn't exactly every 4 years, but 4 years ago, during the last cycle, it took Bitcoin until early 2017 to reach its previous all-time high. So if you just fast forward 4 years, that would be early 2021. And I don't even prescribe to the 4-year cycle. So for me, I wouldn't even think Bitcoin would reach $20,000 until later in 2021, at the very least. So this is pretty much where I stand. And we talked about how 2019 and 2020 are the years to accumulate Bitcoin, most likely the best years, just like 2015 was the year to accumulate it back in this market cycle. So if you go in with the mindset that you just want to accumulate as much Bitcoin as you can, and not really worry about the price, then when the price drops in the short term, it actually presents you with an opportunity to purchase more if you're dollar cost averaging statically, so the same amount each month. It allows you to get more for your dollar, and then it also allows you to purchase it at a lower risk level. So according to the risk chart that many of you guys follow along with, by purchasing Bitcoin when we're at a lower risk level, which right now I think the risk is around 0.36 or so for Bitcoin, maybe, or 0.35 I should say. So by purchasing it, when the risk is lower, it allows you to have more confidence, I should say, in moving forward. If you're purchasing Bitcoin when the risk is say 0.6, 0.7, and 0.8 at these levels over here, then that's obviously more of a short-term speculative gamble. You're just hoping the speculative bubble just continues to go up in the short term. Buying during an accumulation region is much more of a longer term investment and a longer term play. Clearly, this is not financial advice. This is just how I'm looking at the markets. I'm essentially saying that if we were to, let's just draw a date range. So we take it from, January of 2019, and we say, okay, we're going to come, let's move this, we're going to come way out here and say that, oh, whoops. And we're just going to say that, this is the time, and we're just going to be accumulating Bitcoin during this time. That's not to say that we wouldn't accumulate in 2021. I mean, clearly it determines what the risk is doing and whatnot, but if we say that this is our accumulation window, potentially, more or less. I mean, obviously it's not an exact science, but this is our accumulation window, and your goal is to just get as much Bitcoin as you can during this time. Then purchasing at lower prices is better because you want to be able to look back in a year and say, okay, I bought Bitcoin, at the best risk levels possible, which, if you're not buying over here, then clearly this would have been a bad time to buy because the risk was like 0.7. Buying when you see these short-term moves down is better than buying, after it's moved up. So in the short term, where could the price go? Well, I'm not a day trader, and I don't prescribe to be one. I don't, if I think a lot of people wish I would say exactly where price was going more frequently, but the truth is no one knows. A lot of people follow random Twitter people that put out tweets and say, you should short or you should long with this much leverage, and then those people get liquidated, and then they rinse and repeat, and maybe every once in a while the person calls a good trade, but it's complete nonsense in a sense because predicting these irrational short-term price moves is just absolutely unfounded in my opinion. But if we just look historically, the last time that Bitcoin broke the 20-week, we said Bitcoin dominance will rise. If Bitcoin is below the 20-week, then other coins don't perform well. When Bitcoin gets above the 20-week, other coins take off. And we saw, with Ethereum and Link and XTZ and a lot of other coins, they really shot up after Bitcoin got above the 20-week moving average because it brought confidence back to the market. Now that we're below, we say, or when we do get to the 20-week, coming back down, we said, well, if we go below it, then Bitcoin dominance is going to rise. And in fact, it has been rising recently. So I know some people who follow the channel used the 20-week moving average as their benchmark. And once we dropped below it, I said, okay, I'm gonna get out of some of my altcoin positions and just get into Bitcoin or get into a stable coin. And other people are choosing to ride it out. And I think a lot of people that follow me actually only own Bitcoin, and that's fine. Trying to day trade Bitcoin is a risky business because it is the market mover and it can go up as quickly as it goes down. But the last time we dropped below the 20-week, we went straight to the 100-week. Okay, and the 100-week is currently at 71.77. So that is where the last time we broke the 20-week, that's where we went. So keep that number in mind. If we were to drop to that, I'm not saying we will drop there, but if we were to drop there, then it might offer some level of support. Now, historically, if you're thinking, say, like, well, what's the worst case scenario? Well, if you look historically, the worst case scenario is Bitcoin dropping to the 200-week moving average, which is this white line. Back in 2015, it corresponded to $183 or so. We held it as support, another time at $207, and then later at $221. The next time we held it as support was in December of 2018, and it was at around $3,100. Again, we held it as support in February at around $3,200, $3,300. Currently, the 200-week moving average is around $5,500 or so. You can see it's at $5,486. So that is, at least historically, the worst case scenario. Now, clearly, we could fall below the 20 week. There's nothing saying that we can't. But I think it is safe to say that there would be a lot of support at that level. So if we were to fall to the 100 week and we just fell below it, then I think this next level at the 200 week would offer a significant amount of support, and maybe we would fall through it, but I would at least expect a bounce. I don't actually think that we'll fall below it. I might be proven wrong, but we'll follow that to see. So currently, again, it's at 54.86. So clearly, we still have a ways to go before we get to that level. Getting to the 100 week is definitely on the cards at around $7,200, which is where we were trading, just even earlier or late last year and even early this year. And again, when in doubt, zoom out, and it kind of puts things into perspective. And then also, one of the things we like to do is just remove the price, look at the moving averages. We can hide the 20 week because it's a little bit more noisy. Let's hide the 100 week. Well, that's the 200 week, and here is the 100 week. So we kind of see these moves up, kind of dips going into the halving. You can kind of see that here, and then after the halving, it starts to pick up. So I hope this has been informative for everyone. I think essentially, if we are going to fall below the 20 week, which we have, and if we don't really see a immediate correction, then we're kicking the can down the road, and we've talked about that many times before. That it might just be that we come below the 20 week, we drop to the 100 week, and then maybe we test the 20 week later again in a few months. So I would, what I'm doing, I would just keep accumulating Bitcoin at the best price that you can get it. Don't worry about short-term moves. Don't invest more than you can afford to lose, certainly, because if you do, then you're going to find yourself capitulating at the worst possible time, most likely. So don't invest more than you can afford to lose. Keep your time frame, 2 to 3 years out, and relax. Enjoy the ride. It's going to be a crazy ride. You also have to consider that the world economy right now isn't doing that well with the coronavirus. Given a lot of the government decisions, a lot of manufacturing is slowing down. People aren't getting the parts they need. It's just, the world economy is not doing well, and Bitcoin is a high risk asset. So there are going to be some people who liquidate their high risk assets when the world economy is not doing well. And traditional markets are down significantly since the beginning of the year. So it's not like going to them is necessarily a safe haven from crypto. A lot of people are going to cash, and that's just the way it is right now. So we'll continue to follow this. If you guys like the content, please subscribe to the channel. If you want to dive in further, then check out the Telegram channel in the description below. And I do have a Patreon channel for those who want to subscribe and get more content and join the private Telegram chat room. I think we almost have 90 members in there. So, but okay, guys, that'll wrap it up for this video. We'll obviously follow the price in the coming months, coming weeks, and try to give some updates on if we do follow the 100 week and if we see a bounce. And maybe we'll repeat what happened last time. Maybe we won't. All right, guys, that's it for this video. I will talk to you next time. Bye.